Hey, this is Justin with daytradethemarkets.com, and I wanted to talk today about how an understanding of intermediate term support and resistance areas can help you make better sense of the market's relative strength or relative weakness on a day and can really help your day trading. I'm doing this on actually Valentine's Day, February 14th, 2018, although this would apply at any time. Just wanted to use some examples from today. And to give you just a little bit of background, I teach an approach that really is not about the trade setup first. Instead, it's about understanding the market's context first, or the market story. And my feeling is if you can understand the market story, you can have a much better handle on the direction the market is trying to move, and then you can allocate your risk more appropriately rather than if you're just robotically following trade signals that sometimes work and sometimes don't, right? And so the way I do that is I look at different pieces of evidence. I have three main pieces of evidence that I look at. I look at a big picture bias. I look at what I call zone evidence. That's what we're going to be talking about today, or some evidence. Then I also talk about a box and aggression type evidence. And basically, the idea is that the more of these you have in favor of your trade, the better off. I mean, if you have all three of these pieces lining up, you have a very strong edge. If you have 2 out of 3, you still have a pretty good edge. When you get to a situation where you're looking at either 0 or 1 of those 3, it's not quite as good. So that's the idea. Put the market in context first. So again, the idea here today, I want to focus on this idea of zone evidence, or what I call intermediate, support and resistance type concepts. I'll use some examples just from today of crude oil and gold and the ES to illustrate that. But one key thing is I tend to think of support and resistance in terms of this idea of a zone, okay? As opposed to a lot of people look at it as a price. I look at it as a zone, and I think about it in terms of how the market reacts at both sides of the zone. So just for example, let's just talk about generically speaking. Let's say that you have a zone that runs from here to here, just for example. So let's say this is a zone that we know about, and these are known before the day starts. So we have these laid out before the day starts. Then we want to react to how the market acts around those. So let's say that we open here. As we come up to what I would call, the south side or the resistance side of the zone, we would expect that to offer us some resistance. Okay, we would expect it to turn down. However, if the market is strong enough to break into that zone, that's a bullish indication. That's a sign of strength. And if it came back down here, we would expect this area that was once resistance to flip over to support, become the support side. We would expect it to pop higher, and the logic would say we'll go test this side of the zone. Now, again, we get up in here, we would expect some degree of resistance. We would expect it to come back down here. However, if the buyers are strong enough to punch through here, that would be, again, another bullish indication, and it would show us that if it came down here, we would expect it to be support, okay? And the same logic would apply, if we opened, inside of containment or inside of the zone. Let's say we opened here, we come down to the lower end of the support side of the zone, we would expect support. However, if sellers are strong enough to break through that zone, that's a bearish indication. And if it were to come back up here, we would expect resistance if it did that, okay? Now, if it finds support here and we come up in here, we would, again, expect resistance. If it was strong enough, that would be a bullish indication, and vice versa. Also, if we open up here, we come down to the zone here, we would expect support, and we would expect it to move higher. But if, on the other hand, these sellers are strong enough to break back into the zone, that's a bearish indication. That's a sign of weakness. If it came back up here, we would expect that this would offer them some resistance, and we would head back down that way. So again, it's one piece of evidence that you can use that helps you make sense of, on a little bit wider time frame. Again, if we look at these boxes here, you can see that on these boxes, we're stacking buying boxes all day. That's bullish on more of a short term. But on the intermediate term here in the crude oil today, you can see that. Actually, let me bring over the overnight market, because that's interesting as well. The same thing applies in the overnight. You can see that we broke from this zone in the overnight, made it all the way down to this other zone where we found some support. And we've actually found some support like the last 3 times we tested this area. So that's showing us that heading into the day, we opened kind of in the middle of these 2 zones right in here. Okay, so the question was, are the sellers going to be strong enough to pop into there? That would be a bearish indication if they got down there. We would expect some support here, and that's what happened. And then the next test is up on the zone level at this area. Now, this was right after the news, so it didn't give us any, resistance at all. It just pierced right through there. But again, that's a bullish indication. The basic expectation once it pops through there is we should be able to make it up here, which we did later. Now, that said, we might have to test down here, and we got a really nice test of that rejected, and then we were on our way back up here. But that's kind of how we want to think about it on the zone level. Let me show you an example from gold next. Okay, here is the gold market. And again, we had three zones laid out prior to the day. There's more than that, but these are the three that came into play today. We know this heading into the day. And here is where we opened the day, right in this area here. Now we had some, potential inflationary news that came out right at 8:30 Eastern time. We quickly, spiked down, but you can see right at the low of our zone, we were unable to get below there. That would have been a very bearish indication had we been able to get below there. And within a matter of a few minutes, we're back on above the zone. That's a bullish indication. You can start to see some buying boxes start to come in as well. Then our question is, are we going to, with all this buying that's come in, is this zone going to offer us support? It does not. Again, bullish indication once we break through here. Wasn't even weak enough to come back and test it, just broke right through. Then we got above it. Once we're above it, are we going to be able to make it up to here? You can see that we did by the end of the day. This time it did test and it stayed there for a while, but it never did get back into here. It never did what we call accept price back into there. It gave it a couple tests, but it never did accept. And again, we were back up here. So if you look at the indications just on the zone level, again, on our box level, we can see that buying boxes started to stack up. Our selling boxes were failures. Eventually, we talk about how to make sense of all that. But just on the zone level, this zone held support. Buyers were then strong enough to get inside of this one. They were then strong enough to get above this one. They were then strong enough to test up to this one. Okay. Now, tomorrow the zones will be a little bit different, but that's a way of one additional tool that you can use to help make sense of the relative strength or weakness of the market. You can see again in gold, it was pretty strong. Box evidence told us that, but the zone evidence did as well. Let me show you an example from the ES. So this is the ES, and you can see that early on, we tested the low of it. It held support. Came up here. Buyers were, after some buying boxes showed up, buyers were strong enough to break above the zone. Again, a bullish indication. It did come down and give it another test before it headed higher. We didn't touch the next zone, which is a little ways higher up there, but it's just an interesting. It's again not the only piece. If you're just looking at zones, that's not enough. But it's another piece of the puzzle that is a little bit wider lens angle that can help you determine the relative strength, the relative weakness of a market on a given day. So anyway, I hope that helps. It's just one tool in our toolbox that we're trying to again try to make sense of the context of the market, the relative strength, the relative weakness of the market, so that we can get in on the right side more often than not. We're never going to be perfect, but more often than not, we can get in on the right side and allocate our risk appropriately, which is really what our job is as day traders. So hopefully that's helpful. Let me know if anyone has any questions, and we will talk soon. Thanks.